So now let's begin with the solution of the particular problem. So I hope you all have your format along with you to just refer. So now in particulars, what was the question? What was given in the question first? It was given as direct materials, right? Firstly, it is given as direct materials. So as per the format, what do you have to see? When you look into the particular format, what do you see? You have to take your direct wages and your materials, right? So we will be taking, firstly, we will be taking direct materials, okay? So I will take down direct materials, that is rupees 8,000. Next, as stated in the problem, we will take direct wages, that is rupees 6,000. Next, as given in the question, you will take your direct expenses, that is rupees 2,500. Now, why are we not following the particular format from the start, that is your opening opening balance and all of that? Because all of that has not been mentioned in the question, okay? That is the reason why we are just taking as it is stated below. As it is stated in the question, we are following the particular question format. Whatever it is asking us, on the basis of that, we are preparing a cost sheet, okay? Now, after your direct expenses, what will you find out? After you've taken direct material, direct wages, direct expenses, after your first part is completed, you will find your prime cost, okay? So, what is your prime cost? Okay, your prime cost will be 8,000 plus 6,000 plus 2,500. That is 16,500. Take down 16,500, okay? After which you will be adding all of this with your you will add this with your part B. What was the part B? Part B was your factory overheads, right? So you will take a heading as factory overheads. Now under your factory overhead, what are you going to do in your factory overhead? You are going to add your factory overhead, which is mentioned, which is given directly in the question, that is 5,000 rupees. Yes. So you will be taking your factory overheads, you will be adding it with 16,500. So what is the total? It is 21,500. Now what is this total? This total is your cost. What cost is this? It is your factory cost, okay? Now, with this, you will again add your part A is over, part B is over. Now, part C, that is your administration overhead. Okay. What is your administration overhead? Again, your administration overhead is given directly in the question. That is rupees 4,000. So, we will take it directly. Now, what you get after adding this? You will get your administration cost, or you can call it as your cost of production. Okay. So, what is 21,500 plus 4,000? It is 25,500. Okay. You will get your cost of production. Now, what are you going to do after you get your cost of production? You need to find out your profit, or you need to find out your loss. Now, how will you find out your profit or your loss? Is basically write down as your thing as profit or loss. Okay. Now, take the thing. Lastly, what is the information which is given? Your sales will always be in the last, because when you look into the format, your sales or your selling price comes in the last, after which you will find out your balancing figure, that is your profit or your loss. Okay. Now, how much is sales? Sales is rupees 40,000. So, take 40,000 here and find out your balancing figure. Now, how do you find out your balancing figure? That is 25,500 minus 40,000. That is minus 14,500. It is your profit. Why? Because your sales amount is greater and your cost of production is less. So 14,500 is your profit. This is all you need to do in your particular solution, because here entire information is given to you directly, so you do not have to classify under different heads. I think this is very clear and is understood by you all. So now let's move on to your second problem, which is again similar to the first problem, wherein everything is mentioned directly. Okay, so as you can see the illustration 2, it says calculate the prime cost, factory cost, cost of production, cost of sales, and profit from the following details. Okay, what is it asking us to calculate? Your prime cost, your factory cost, your cost of production, your cost of sales, and profit from the following details. Now, what do you have first? You have your direct materials, that is rupees 10,000. Direct labor, rupees 4,000. Direct expenses, 500 rupees. Factory expenses 1,500, administrative expenses, that is 1,000. Your selling expenses 300 rupees, and your sales is 20,000. So what are we going to do? Similar to the first problem, what are we going to take? We are going to take your direct material. Yes, we are going to take your, just a minute girls. You are going to take your direct material, after which you will take your direct labor. What are you going to get after adding direct material and your direct labor along with your direct expenses? You will get your prime cost. Okay, when you add your direct material, direct labor, and your direct expenses, you tend to get your prime cost, after which you will add your factory overhead, factory expenses. Okay, you will add your factory expenses, that is rupees 1,500, after which you will get factory cost, after which you will add administration expenses, that is rupees 1,000, and you will get your cost of production. After you get your cost of production, what you do is basically you put it as profit or sales. Lastly, you will take sales and you will find out the profit or loss. Okay, okay, this is how we do it. I hope it's clear. So now let's move on to your solution 3. Okay, in your solution 3, it says in a factory 20,000 units of a product A were manufactured in the month of July 2012. From the following figures obtained from the costing records, prepare a cost sheet showing cost per unit. Okay, now what is the information that is given? Opening stock of raw materials, that is rupees 5,000. Purchases 55,000. Closing stock 10,000. Factory overhead 40,000. Direct wages 25,000. Office and administration overheads 20,000. Now there is something really different in this particular problem. Everything is given directly, but it is asking us to also calculate cost per unit. Okay, so how are you going to do it? Is basically you will have particulars as one column. You will have two columns here. That is, your first column is your total cost, and your second column will be your cost per unit. Okay, so what is the first thing it is asking? That is opening stock of raw materials. That is part A of your problem. So take the first part, that is the opening stock of raw materials. Stock of raw materials. What is the amount? It is 5,000 rupees. Next, what is it saying? It is saying purchases. So what do you have to do with purchases? You need to add your purchases to opening stock of raw materials. Add purchases to opening stock, that is 55,000. So then you also have what will you get from opening stock and purchases? You will get your raw materials that are consumed, right? So take raw materials that are consumed, 5,000 and 55,000, you will get 60,000. This is your raw material consumed. Okay, now to this you will be deducting your closing, because closing stock is also mentioned here. You will be taking closing stock of raw materials also, that is rupees 10,000. Okay, closing stock, that is rupees 10,000. Deduct that closing stock of raw materials 10,000. So what is the total you arrive at? It is 50,000. Okay, now What are you going to do with the closing stock of raw materials after you get the total? What is this total? This is the total of raw materials which are consumed. Okay. This is raw materials consumed. After which you are going to add your direct wages. Okay. Direct wages is 25,000. So you will get your prime cost, that is 75,000. Okay. After you get your prime cost, you need to add your factory overhead. That is, as mentioned, your factory overhead, that is 40,000. So you, after adding the prime cost and your factory overhead, you will get your factory cost. That is 1,15,000. And you need to, after which you need to add your administrative expenses. Administrative expense. Your administrative expenses, office and administration, is rupees 20,000. After which you will arrive at the cost of production. Okay, cost of production is your 1,35,000. Now here you do not have any information regarding sales. So when you do not have any information regarding sales, you will not be able to arrive at the profit or loss. Now what do we have to do with the second column, that is cost per unit? How do you calculate cost per unit? If you look into the question, it says in a factory 20,000 units of product A were manufactured in the month of July 2012, right? Now what is your opening stock of raw materials? That is 5,000. How do you get your cost per unit? You divide 5,000 divided by 20,000. Okay. 5,000 divided by 20,000, that is 0.25. This is your cost per unit. Next, 55,000 divided by the total cost of unit, that is 2.75. Similarly, 60,000 divided by 20,000, that is 3. 10,000 divided by 20,000, that is 0.5. 50,000 divided by 20 is 2.5. 25,000 divided by 20,000, 1.25. 75,000 divided by 20, 3.75. 40,000 divided by 20, 2. 1,15,000 divided by 20, 5.75. 20,000 divided by 20, that's 1. 1,35,000 divided by 20, that is 6.75. So your cost, your total cost per unit, okay, cost per unit is equal to total cost divided by the units of product divided by the total unit of product. Okay, I hope the third problem is clear to you all.